Okay, I think what I'll do, I'm just going to start with the introductions and then I'll hand it over to Rob, who's doing today's workshop. But yeah, my name's Bobby. I'm the local enterprise manager at NatWest. And the plan is to sort of work with GBS going forward about providing help and support, delivering different workshops and content going forward. So about a month ago, I did the Understanding Your Customer, and I think it was really good feedback as well. So this month we've got Rob. He's our accountant. He's one of our partners here on NatWest, and he'll be delivering the workshop today. I'll get him to do his introduction about himself, a little bit about his background and sort of where he's come from in his work experience. But my one ask today is just have fun, make it interactive. We're in a safe sort of setting. If you have questions, I'm more than happy for you to fire away. If you want to put it in the chat, by all means, you can do that as well. But if there's things you want to pick up maybe on a one-to-one basis, that's also fine. That's not an issue. So Rob, over to you.
All right, brilliant. I am Rob Carroll. I work at an accountancy firm called Wharfside Accountancy Services. So I have worked in the accountancy industry for 19 years. Well, that's a long time. Like Bobby said, I do some work with NatWest and their enterprise hub, and he's asked me to deliver a presentation today on cash flow. So the purpose of the presentation is just to give you some background on the importance of cash flow in a business, and the main focus would be the difference between cash flow and profit. As clients of ours or small businesses typically, it's a challenge to get their head around the difference between cash and profit. So I am just going to fire away. Can everybody see that?
Yeah.
Perfect. So, like I said, what is cash flow? The importance of cash flow, difference between cash and profit, and ways in which you can manage your cash flow. I wanted to start with a question, so if anyone can jump in and answer. So if you were to start a business with £1,000 and you buy stock of £2,000, you buy stock for £1,000 and you sell it all for £2,000 the following day, but you do that on 30-day credit terms. On day 3, how much money do you have in your business? Does anyone want to jump in with an answer? Okay, the answer is actually a 0.
Okay.
Yeah.
So whilst you have sold all of your goods for a profit, that profit won't be received, or the cash won't be received for another 30 days. So whilst it's really good, you've sold all of your goods, you then don't have any cash to trade for the next 30 days until you're paid. So hopefully you can see the challenges that could come in there. Cash flow refers to the movement of money in and out of a business. Most businesses would measure this over a period of time. If businesses are producing monthly management accounts, it's a forecast of that typically. It might sound self-explanatory, but positive cash flow is where you're generating more cash than you're spending, and negative is where you're spending more money than what you're receiving. Both of those things can happen, and both of those you don't have to necessarily be associated with a positive and negative. Fluctuations happen all of the time, and it's just important to understand why that happens and how you aren't left with too little cash in the business. The main importance of cash flow is just making sure you have cash for a day-to-day running of your business. So making sure you can buy stock to resell, making sure you can pay bills on time. Those things aren't happening it can then affect how your business is running. Other things to consider are future investments. So if you are manufacturing something and you're going to need some new equipment in the future, or even if you aren't manufacturing and just that your laptop is coming to the end of its useful life, you're going to need some money to pay for that. And then unexpected bills. Again, if that laptop was to just break, you're going to need to cover that. The biggest thing with cash flow is noticing the difference between cash flow and profit. So profit is calculated based on when something is bought and sold. But like I showed in that initial question, if those are on credit terms, then that isn't a cash item. It only becomes a cash item once you receive the money, but you would have generated a profit at the point in which you sell. There are other things within a profit and loss account that are non-cash items. So things like depreciation. If you were to buy, again, I'm just going to use a laptop just to keep it consistent. If you were to buy a laptop and you know that it's going to be useful for 3 years and last 3 years before you look to upgrade or replace, then that asset in the business would be depreciated over the 3 years. So whilst you would have paid cash up front for it, it would be then depreciated over its useful life within the accounts. So the profit wouldn't take the hit straight away. And there are other non-cash items that you could possibly see in a set of accounts. So these are things like accruals, so where you're making provisions for future expenses. And other things to consider with cash flow, and I've noted it here as a cash flow variation. If people are paying deposits, or if you need to pay a deposit for an item, then whilst they are cash, again, they're not realised within a profit and loss setting until the main invoices are raised. And in some cases, people can pay on a pro forma basis. That might be a term that you've heard before. That is where the cash is being paid before invoices are being raised. I believe that these slides are going to be available for you to see afterwards. So I'm not going to read everything out for you now. I'm just going to give an overview. If there's anything you need to refer back to, you should have access to them. So similar question. I've used the same figures as the first. So you introduce £1,000 into a business, you spend it all on stock, you then sell that stock on 30-day terms. How much profit would you have? Anybody want to jump?
Is it the same answer?
Zero until 30-day term.
No, so the profit would be £1,000. So the point in which you sell is when the profit is calculated, although you don't receive the cash for another 30 days. So that's then the difference. So the answer would be B, 1,000, because you've bought it for 1,000, you've sold it for 2,000. So 2 less 1 is 1,000.
So it's 1,000 for that month. That was profit until you spent it.
No, so if you would just have £1,000 profit off this transaction. What you then do with that £1,000 is a completely separate transaction. Is that okay? Ways in which to manage your cash flow. So this is a very broad overview that not necessarily all of these things are relevant to every business. The biggest tool you can create is a cash flow forecast. And this is just planning out the ins and outs of your business. You can do this as a historical task to show how your business has performed, but then trying to predict what's coming is a very good exercise to do to make sure you're going to have enough cash for your business to operate. Accelerating inflows would be potentially offering incentives for people to pay early. So some businesses could offer discounts if invoices are paid within 10 days as opposed to 30 days. It's just incentivizing your customers to pay earlier because the benefit to you having the cash is greater than you losing a small amount on your invoicing. That's not typically seen across the market. It's just it's a mechanism that you could use to bring cash in. Controlling expenses. I guess the biggest example of controlling expenses would be just to make sure you are spending your money wisely and that you aren't spending unnecessarily, but also using finance mechanisms for purchasing assets and things like that. So like with the laptop, you could spread that if you were able to secure some finance terms. Managing inventory would be looking at how much stock that you would have in your business. So if you are selling a physical product, what you don't want is lots of those products sat in storage, spare bedroom, whatever that is, waiting to be sold. If you've got 12 months worth of stock sat waiting to be sold, that isn't cash that you could use to run your business effectively. Having more than 3 months worth of stock might not be the best option. It all just depends on what you're selling, I guess. But the more stock you have, the less cash you have, and that isn't generating sales, especially. So a couple of broader scenarios now would be trying to negotiate terms with your suppliers. So like where you could be selling things on 30-day terms, you could maybe look to be buying more on 30-day terms, 60-day terms, just to try and free up some time. Monitoring, controlling debt, again, financing assets, banking options, like loans and things like that could be a mechanism here. Some companies use something called invoice factoring, where a lender would give them 80% of their invoices up front, so they wouldn't be waiting for credit terms off their customers. That's a mechanism we've seen sometimes. Building relationships with lenders can happen just to try and build yourself some time, so you're not paying out a lot of cash up front. Trying to build up cash reserves obviously is useful, so you have cash within your businesses for any unexpected expenses. And then lastly, it's seek professional help. So there are debt management companies that can help without necessarily affecting you in a negative way. I know I've gone through this quite quickly, but just to recap, cash flow is essential because it reflects the liquidity and the financial health of your business. So having positive cash flow will benefit your business because you have money to make decisions. Having the cash flow forecasts, so monitoring your cash flow, is beneficial to make sure that you are prepared for eventualities and predicting how you're looking to perform in the future. Was it from me, because I'd like to answer some questions and just have a look on the chat to see. Yeah, okay, Bobby's already prompted me there. So does anyone have any questions?
Rob, I've got a question for you. So, I mean, in your role as an accountant, I mean, you must have loads of people coming to maybe a new startup, or they've really recently incorporated a company, they're doing their first set of annual accounts. Mm-hmm. What sort of advice or help and support or sort of guidance would you give for them to sort of stay on top of their cash flow in the first year, again, with finances being so important, especially when you first start a business?
Yeah, I guess the biggest thing is trying to get customers to pay on time. If you're providing a service or a product, what you don't want is to be left too long before you're paid. So keeping on top of credit control is very, very important. So it is worth setting up the time to do that. With a lot of software products now, they allow for automation of credit control, so that can be quite useful, especially where we've got single owner managed businesses where there isn't a lot of time because you're out there trying to generate new sales. Then that can be there as a good tool. So it's just keeping on top of the credit control is key, so that cash is coming in as quickly as possible.
Okay. I've got another question as well. Rob, it might be worth just stop sharing your screen so we can see all the participants now.
Yeah.
But the next question I've had is, how would you know when to sort of revert to maybe to other solutions to help you with your cash flow if you know you've not got enough in the business? I mean, how would you know when it's the right time to move to maybe an overdraft or invoice finance?
Yeah, so that can vary depending on the type of business and what the future looks like. So if you are managing your cash flow, if you are using a forecast, you could potentially know that you've got a big event coming up, or if you have like seasonal products where when it comes to say Christmas or Easter, you know you need to buy lots of stock in advance. If you're planning out your activities, you could then see, well, I'm not going to have enough money to buy the stock, but I will get enough back once the sales have been generated. Then things like an overdraft can become useful because that's a more short-term solution. If you were looking at invoice financing, that would be typically if your customers are paying over a longer period. So if you have big customers, they might be looking to push for 60-day terms rather than 30-day terms. That's where invoice financing could come in. If you're looking for more long-term financing, then that's where a loan could potentially come in because you are then spreading that over a longer period of time in repayments.
Thanks, Rob. I think my sound is working now. Hopefully you can all hear me. I can hear you. So I think Angela has got her hand up. I don't know if that was from previous, but please go ahead, Angela.
Oh yeah. So I'm a student from GBS. I don't have any knowledge about cash flow. I don't have any background. So my question is basic question, but I want to gain knowledge about the cash flow because I'm student accounting and finance. And I would like to ask, like a company, I don't pretend to open a company. I want to work in a company in the future, but the company have a bank, have account for profit and the cash flow all together, or have a separate account, one for profit and another for cash flow?
Yeah, so they would be separate. So you would have a profit and loss statement, and then you would look to build on that then with a cash flow statement too. So it'd be the cash flow would be a separate thing to the profit and loss.
Okay, thank you.
I think Julian had a question. Are you able to unmute and ask?
Oh, I don't know if you hear me. I hope that everything is all right now. Thank you very much. Regarding the cash flow, we should have the same account for payments and payments which we receive from clients and payments which we need to do to our collaborators for I don't know for acquisitions, or it's enough to have just one account for both.
So do you mean a bank account?
Yeah.
Yeah, so yeah, you can just have one bank account. So things like cash flow and profit and loss, whilst I might say they're a cash flow or profit and loss account, then it's they're just forms, they're statements. So they're a result of calculations. So yeah, one bank account for all movements would be fine. That's how a lot of businesses would operate. But again, you could have multiple accounts. It varies. There isn't a definite answer to that. Sorry.
Thank you.
Rob, I think there was a question in the chat as well.
Yeah. What about to scale your business to increase your cash flow? So that would just be introducing mechanisms to increase your cash flow. So if the important thing is to plan out how you expect things to go, and then it would be introducing mechanisms then once you have that plan. So it could be that you look to reduce your costs over a period of time. You want to try something to increase your sales, which will generate more cash, or introduce incentives to bring more cash in if your customers aren't paying well. So if you have a specific task or a specific project item in mind to scale your business, that's where finance could also then come in. So if you manufacture something, you could manufacture something quicker. If you had your own machinery rather than outsourcing, then financing could be a good tool for you. Okay, another question. VAT account, customer account expenses. Would you need
expense account? Expense account. So you're VAT registered, you've got customers, you've got old, you've got invoices that are 90 days, 60 days, punching out big figures. So you're waiting. So money's coming in, money needs to be divided for like VAT purposes, tax purposes. How does a bank come in to kind of like divide everything, and how is that set up? And would you need 3 accounts, one for expense, one for customers, loan account? How does it all work?
Yeah, so you wouldn't need more than one bank account. You would just have the financial instrument. So if you're VAT registered, you have to submit your VAT return via a piece of software to HMRC. It can't be done in any other way now. If you have that software, that would be doing all of your bookkeeping. So you would be able to see how much profit you have, what your VAT liability would be, how much money you're owed, how much money you owe. So everything is in one place. You can then marry that back to your bank balance. That doesn't need to be 3 separate accounts. You wouldn't have typically a bank account to receive money and a separate bank account to spend money. You might have a savings account where you're putting money aside for VAT or for tax. Some businesses do that. So they have an account for their working capital, their day-to-day running account, and when they know their VAT's going to be so much money, they start to put money aside into a savings account. But there wouldn't need to be multiple accounts, because you would have the records to show how your business is performing. All
in a business account.
Yeah.
And but what if a sales invoice comes in at big numbers, and so you would take that 20%, chuck it somewhere, but obviously when you file on the accounting software like Xero or QuickBooks or Sage, obviously after your expense it's going to be showing a less figure.
Mm-hmm. Yeah, so
and
you can
then
do that
that's something you could just put to the side.
Mm-hmm.
For when you're doing your corporation tax.
Yeah, and yeah, some businesses do that. It would just be simply a savings account where you're putting money aside for a potential future tax bill.
I mean, what I would say as well, I mean, just to sort of add on to what Rob's saying, I think it's really important to make it really organised, really plan, really understand all your income and all your expenses, because at the end of the year, when you're doing your annual sort of accounts and you go to your accountant, so it could be Rob, for example, the more information you can give him or break it down, it just makes it more straightforward for Rob. It saves him having to sort of go in and dig into your accounts and understand your bank statements and just exactly what the business performance is. So that's really important. Planning, preparation, cash flow forecast are a big part of that as well. And the first 12 months of any new business is quite difficult. It's difficult time. There's a lot of uncertainty. So the more you can plan and prepare things, and I do understand that you can't prepare for everything, but if you can control what you can control and really understand that will really help you.
Yeah, the tools are out there now with bookkeeping software where you can really keep on top of things, and see performance a lot easier than 20 years ago when I first started out, where everything was in books and people were writing things down. So there are the tools. What types of cash flow can be a creator? So obviously generating sales is bringing in money. Other ways of doing it would be potentially through finance. So where you have bills coming up, you could look to spread the costs. If you think commercially, one thing that probably all of us have seen if we shop online, there are products, things like, I'm not advertising them, but things like Klarna, where you would spread the payments over 3 months. That is you, if you were to use something like that, that is you managing your cash flow personally. It would be things like that. So trying to generate cash flow would be just trying to sell more at the start. Other ways to then manage your cash flow would be to manage your outgoings with things like that. But yeah, that's an example.
Minimizing your costs, minimizing your costs, like in wastage and etc. and etc. But what if everything you've done everything like that, but you still have quite a bit of money and you want to create cash flow through properties and expand different businesses where different businesses are creating cash flow. So you've got cash flow coming in different directions, because it's a liability, but it's an asset, but the asset is creating a cash flow. And that cash flow you could dip into.
Yeah, so maybe I've misunderstood your question there. Sorry. So
yeah, sorry.
If you have cash and you were looking to get performance out of that cash, obviously bank interest might not be the best solution for you. So yeah, investing that into other areas could generate you secondary cash flow. Yeah.
Oh, Angela, do you have another question, or is that an old hand?
Yes, I have another question. When the company does cash flow analysis, so it's varied from a small company to big company, but when they do that?
It's an internal mechanism. There isn't an official cash flow that you need to do in the same way that there would be for profit and loss and balance sheet. So it's just an internal control. Some people will do it weekly, monthly is probably typical, quarterly. It all just depends on the business and how closely you need to manage that.
Okay, thank you.
Real, thank you. Are there any more questions? Please feel free to just raise your hand and then we can get to you, or I mean, I can ask you a question, Rob, just quickly. Where can people find more information if they want to sort of learn more about cash flow? Like, do you have like a website that you can share with us?
So there isn't any resource on the Wharfside Accountancy website specifically around cash flow. If you were to go to accounting bodies, they would have good resource. So if you were to Google things like cash flow ACCA, cash flow AAT, they would have good relevant articles on those that would have really good definitions in place. So an accounting body, if you're ever looking at any sort of tax or cash flow, would be a good start.
Real. And I'm guessing, Bobby, there's also NatWest information that I can signpost everyone on this call to as well.
Yeah, I mean, possibly. I mean, yeah, when it comes to cash flow, we have to be sort of a little bit careful just to make sure we don't advise people. But I mean, what I would say, all the information is available on multiple streams on the internet as well. And you got Robbie as well. So I mean, in the future, if things come up, by all means, you know, you can get in touch with Rob. He's based in Birmingham, so again, not too far from, I think, North House. He's just literally down the road. But what else I would say, just really quickly, I've been with the bank for the last 12, 13 years, and I've done various sales jobs. And there's been times where people have applied for lending, or they're looking at working capital solutions, or they're looking to have some sort of facilities in place. And we do typically ask for cash flow forecasts. So for those of you who are thinking about starting a business one day, or, you know, just trying something different, or you've got some sort of aspiration to do a business, I'd always say look into cash flow forecasts, really understand that, because that's sort of, it's become the norm now. So if you want to go for an overdraft and you're quite new, they'll be like, give us a cash flow forecast. Where do you see business performance, income, expenses? What's going to be sort of your business performance for the next sort of 12 months? So I would say, you know, go out there, really research that, and it's a really valid tool to have as well. I think there's a question from Angela as well.
Yeah, my question is about to get more information, and it's not just information like a certificate, because I'm doing accounting. This is my foundation year, and I would like to work in the industry in the future, but I need a part of my degree. I will finish in 4 years' time. It is a very long way for me, but in short time, I would like to do maybe a short course, like to be able to put it on my CV, or to be able to work, to look for one work placement. Do you have idea, or could you guide me where to find a short course, or somewhere I have to get more knowledge to work in that area?
Yeah, so there's particular colleges that offer financial qualifications, Kaplan, BPP. They might have an offering that is a shorter course. A good practical course to start with is something like AAT is a practical course. I don't know how that would work alongside your degree though, but unfortunately, I don't have an answer to say, yeah, go to this course. I've not have experience of that, sorry.
Yeah, about AAT, I heard about, and I've done one AAT course before, but now I'm in student finance. I'm not sure if I'm able to go to the college as well at the same time, do ask for student finance, because one course in the college may probably they're gonna ask me, or probably have to pay this course as well. I don't know.
Yeah,
Angela, I
believe
think
so.
the best person there is Annabelle. I was just going to say, she's the person you need to go to, because she'll have all the answers for you with that.
Yeah, I
I
think
have the I have the
check.
answers.
Oh,
College,
okay.
you have to pay. College, you have to
Okay,
pay.
to
AAT
pay.
is no longer funded. You have to pay for it. It's the professional body.
Mhm. And do you think do one of those courses like or cash flow or bookkeeping or AAT, I don't know, wherever in the accounting finance, do in the college or do privately? Do you think it has the same value where when I go to looking for a job?
You might, well, you need to check what is included in your degree with GBS as well. So just check that, because I know you said you're on foundation year. So these things are probably coming up in your degree. So I don't want to sort of like guide you to another college if you're already kind of taking this degree with GBS. But Baldeep, do you have another point to add to that, or?
I'm part of AAT. I pay for a subscription on a yearly. I'm one exam away from the bookkeeping license. Everything that you've mentioned, those bodies I've worked along with, I've done life accounts underneath supervision. But you can self-teach yourself by subscribing to the subscription, £100 or 120 or whatever it is for the year. All the resources are on there, and you can kind of like engage on the cash flow. You can get the textbooks, you can self-teach yourself. But with GBS, when you go into the first year, they will be teaching you manufacturing accounts, where you'll be doing LIFO, FIFO, ABCO, and using the AAT site, it can make you a bit stronger when you're sitting that in year 1 degree. I teach myself.
Brilliant. Thank you for that.
Thank you. Yeah, thank you.
I'll follow up with an email to everyone just to kind of summarize all of the resources and information that we've shared today. But if there aren't any more questions, I've just popped a link for a short feedback survey on this session. Just give us your thoughts. Yeah. And yeah, please do put it in the feedback form as well, like if it's going to relate into a workshop that I can offer, you know, from September onwards to support with that as well. More than happy to incorporate that into the plans for next year and the workshops. But okay, I think that brings us to the end of this informative workshop. I know finance and cash flow, it's a lot of, you know, numbers and kind of thinking of, you know, ahead into the future and planning and things like that. But hopefully everyone has found it as informative as I have. Please do fill out the feedback form as well. And please join me in thanking Rob from Wharfside Accountancy Services, and also Bobby from NatWest Bank for this workshop. And again, apologies for the my technical issues in the beginning. And hopefully everyone will have a great day. Thank you very much.